Hi, I'm John Stewart, Chief Investment Officer of Farmers Trust Company. This is the Investor's Edge.
The Investor's Edge, Market Insights with John Stewart, is brought to you by Farmers Trust Company.
Hi, I'm John Stewart. Welcome to the Investor's Edge. First up, the week in review, a resilient market. Well, there have been plenty of headlines recently that could have given investors reason to want to reduce risk and take stock prices lower. It seems like every other day there's an announcement regarding new tariffs from the Trump administration, which is something we're told we should be afraid of. In addition, earlier this week we had an inflation report that came in a bit higher than expected, causing a pop in longer-term interest rates. That's something that stocks typically do not like to see. And while some of these headlines indeed drove an initial move lower in stock market indexes, the pullbacks have all been very short-lived. In some cases, just a matter of minutes before prices have rebounded only to trade at much higher levels. Now, a market that won't go down, despite seemingly bad news, is a market that tends to have solid underpinnings, even if the underlying reasons aren't fully understood at the moment. The market's always looking forward, and at least for the time being, it seems to like what it foresees. For this week's featured insight, suitability. Beginning and novice investors tend to look at the world in absolutes. I just want to make as much money as possible, they think. And this tends to lead to decision making that typically neglects the risks inherent in the financial markets. And that's especially true after a period of strong performance for the stock market, when it seems like prices will continue to do nothing but go up. When investing money, it's important to consider the suitability of an investment. Do the characteristics of that investment suit you? If you panic at the first sign of loss, you should probably select more stable investments like short-term bonds or high-quality dividend-paying stocks. On the other hand, if you have a stomach for risk and you won't need to withdraw funds for many years into the future, by all means, focus on growth-oriented assets. Just understand that sometimes their value can, in fact, fall significantly. Looking ahead, keep an eye on earnings. Well, despite the market's resilience that I mentioned earlier, there is one thing that is keeping us somewhat cautious in the short term. Earnings. Earnings estimates for the next several quarters have been dropping recently, and they've been dropping at an accelerating rate versus the past couple of quarters. Now, at the beginning of the year, S&P 500 first quarter earnings were expected to be up 5% versus the prior year. Now the estimate is for just 1% growth. Similarly, the second and third quarter estimates are both down from over 8% expected growth to 7%. Now, lowered expectations are easier to beat, but we'll have to keep an eye on this trend to see if it gets any worse, especially in light of stock prices that keep rising. Once again, I'm John Stewart. Thank you for watching The Investor's Edge.
The Investor's Edge, Market Insights with John Stewart, is brought to you by Farmers Trust Company.